I want to welcome you, good morning, to Internet Week and to the Columbia Business School. My name is Ava Seave. I am an associate adjunct professor, and I teach strategy here at the school in various ways. This morning we have two panels. This is the first one, which is financial services. The official title is Financial Services Online, Customer Value, Company Profits, and Competitive Issues. And in a minute, our panelists will introduce themselves. But I just want you to know what a master class is, which is the organization here at the school that's sponsoring it. And master classes are project-based electives for second-year MBAs that require students to make managerial decisions or recommendations on real-world problems for actual sponsors. So this is our attempt to get people to actually make decisions rather than just theoretically studying them. For the panel, the format is that I'm going to ask the panelists questions, and presumably they will try to insult each other and get them to talk to each other as well. We're going to do that for about 50 minutes, and then I'm going to open it up for questions from you guys. And if you could just identify yourselves by name and the company that you work with, if you have a company affiliation or a school affiliation, that'd be great. And you can ask questions. So thank you, everyone, and let's get started. So Jonathan, if you could start by introducing yourself.
Sure. My name is Jonathan Nee. I run the media program here at Columbia Business School and teach media strategy and media mergers and acquisitions. And the latter of those is reflective of my day job. I'm a media investment banker. So that might lead you to ask what the hell I'm doing here on a financial services panel. I do a lot of online media mergers and acquisitions, and some of that is on the information side and the financial information side. So I advise Dow Jones on buying MarketWatch, for instance. And given what's going on the information side and the pure media side, the services aspect to information has become a critical part of the value proposition. So I've ended up having, at least hopefully for you, some tertiary knowledge of financial services as well as information.
Gaspard?
So my name is Gaspard de Dreuzy. I'm the founder and CEO of a company called Kapitall, based here in New York. And we produce and operate an online full-service retail investing platform called Kapitall, targeting younger and less sophisticated investors by leveraging video game graphical user interface to make the experience much more compelling and user-friendly for a broader audience interested in investing. And my background is in the video game production, so I spent more than 10 years producing games for different console systems like Xbox or PlayStation or Wii, and started several game development studios.
So just because people aren't familiar with your actual website, since it's brand new now, where are you in beta now? Or?
So we've been developing the application for almost 2 years now, and we're in private beta. So we're opening the beta to the public in September of this year, so in a couple of months.
Okay, great. Kirti?
My name is Kirti Srikant. I'm Vice President for Online Strategy at Citibank. And aside from managing all of the advertising and online acquisitions for Citibank, I also am currently a student at Columbia Business School, the executive program, and I'm due to graduate this fall.
Right, and she has a new baby. But she's not busy at all. There's nothing to do.
And whether she graduates or not is going to be a function of what kind of applause you give her at the end.
Right, so we'll have an applause meter at the end. Okay, Eric?
I'm Eric Johnson. I'm Director of the Center for Excellence in E-Business at Columbia, and also have a second highlight, which is I'm actually very interested in behavioral economics, and happen to believe that people aren't particularly rational, particularly in retail investing, and so I'll wear that hat quite a bit while we talk today.
Great. Okay, great. Okay, so let's get started. So the first question I want to ask is about how the internet has helped or hurt revenue potential for financial services. So, Kirti, I would like to start off with your comments on that, because
Sure.
you guys have had old media and old bricks and mortar, and now you're online.
Right. I mean, structurally, it's been quite different for us. 10 years ago, when we were just strictly a brick and mortar operation, it was very different. Products were created to sell them face to face. We depended on personal bankers for the sale of our products. But in the last 10 years, what has happened is, and I'm going to just walk you through. So 5 years ago, what happened was we started going into what's called a direct bank scenario, where we created products that were only specific for online. And that actually changed the structure because we were not taking our product that's in the brick and mortar shop and marketing it online. We were creating a separate product line and marketing it online. So therefore, we then faced the hardship of competing with very small institutions that may only sell a CD or they may only sell, a savings product, and having to really compete on the pricing. So ultimately, it's the rate that drove all of our products for online. Whereas in our brick and mortar operation, it was based on relationships. So you could kind of structure your pricing a lot differently. It ended up creating a narrower spread for us over time. And so therefore, we have been now forced in the last 3 years to basically bring all of our brick and mortar based products into the online space and kind of bring it full circle now and not try to compete with like other online only banks.
Well, does that drive the price of your brick and mortar products down as well? Because you have to have consistent pricing?
Yes.
Right.
But we couldn't bring it as low as our internet products because there's a lot more, overhead with managing, personal bankers and stuff now, like, other people.
Right. Well, isn't that really confusing to have?
It was.
Right.
It was very confusing. When I started at Citibank, I was a part of the direct bank. And I basically had no affiliation, no association with the brick and mortar people. I didn't even know how a franchise was run and what was the sales process. That's how separate our entities were within the bank.
Mm-hmm.
Just the answer, but going back to your question, which
Right.
was the revenue question.
Right.
So obviously, when the price goes down, more people buy. At least that's what the
Right,
bank
so we
says.
were able to skim the market by doing so, and we generated billions of dollars with our savings products. But what happened was cannibalization started occurring, and also people easily pulling their funds out from our accounts into our competitors, HSBC, B of A, and whatnot, because they started competing with us heavily on the rate. So we initially did really well, and then all of a sudden you saw this drop because it was like, okay, our money keeps going out all the time. So that's why we had to change our whole entire product structure.
Just if you stood back, it sounds like the total assets under management have gone up because more people have become investors, but the pricing, two other things have happened. The pricing has come down, so the revenue for the whole business is probably net lower.
Net lower.
And your share is also net lower because you're losing share. This is
an interesting thing, though. Like, even though we saw like our revenue kind of fluctuating after we kind of hit a peak and we went back down and we started fluctuating quite a bit, what we also noticed, though, is that our share, though, stayed consistent or even increased because we were able to penetrate, basically the marketplace in regions of the country where we have no footprint, because we have no brick and mortar. So that's where the online products became essential for us.
Right.
So it was almost like catch-22.
Let me try a version of that question, but one that's a little bit more oriented toward customers. Are there certain kind of customers you have gained and others that you've lost? If you think about the whole portfolio of customers you have, who's stayed and who's gone?
Well, this is an interesting thing, and we kind of battle this on a daily basis almost in the marketing area at Citibank, is that we have customers that are only going to be offline, as we call them. They're not going to ever come online. But we have more percentage of our customers, which is 52% of our Citibank customers, that are totally into banking online. They want to bank online. But of that percentage, a lot of them are also in areas where we have no brick and mortar footprint. So it's a really difficult question just to say like, okay, yeah, this is a customer that's offline and this is a customer that's online. It really depends on region and depends on our footprint.
But one thing that I've noticed is that the internet has made customers much better at finding the right company for them.
Exactly.
And so high-value customers, I know one well-known, you can see Ken Fisher's ad everywhere, you pop-up ads on the internet. He pays about $500 per customer for acquisition.
You said 500?
$500 per customer. You wonder why there's so many banner ads. That's why. So, I mean, one of the things that I worry about is, a benefit of that is the high-value customers are being skimmed appropriately. But the middle value, and so I'm asking you more in terms of worth of these customers, are you seeing changes over time?
We have been able to penetrate, I would say, what we call the mass market. The mass affluent
Right.
are still through our brick and mortar operation.
Those are brick and mortar. And so who's online?
It's mostly our mass market, and so we call them actually blue customers. They make a majority of our portfolio. And then we've got our gold customers who seek that personal relationship, and if they have more than $100,000 in an account with us, they definitely want that face-to-face interaction.
So the people who are coming in as customers, and I want to ask Gaspard about the product that he has. I mean, some of the stuff that you have probably never existed in brick and mortar, that it just existed, and it couldn't have existed in brick and mortar for some reason, right? Right. So I wanted to ask you about your company being purely online and not having anything to do with Citibank and so forth. Could your business have existed without the internet? Is there any way that it could have existed, perhaps?
What I'm doing, no.
Yeah.
But what the internet, I think, allowed people to do was to basically cut all the middlemen and also created some new segment for the market. So if you look at, for example, online trading, without the internet, online trading is kind of difficult. So the internet invented new ways of doing old things or doing new things and open new opportunities for new players and new companies. We are in a space where we are trying to engage younger customers or younger investors to the market game, and the internet is absolutely a great way to deliver real-time information, analytics, allow people to connect, share information.
All right, so why don't you talk a little bit about what that is? So you've got a site, your site eventually will have people having their portfolio on the website, right?
So what we're doing is as I said, is a full-service online investing platform. So we deliver news and data. We deliver tools to allow users to analyze and manipulate information to get better understanding. We allow users to share, to compete, to collaborate.
Right.
We allow users to execute strategies, so to place orders. We're not a social network, but we really allow users. We deliver a lot of communication and community features.
Right. You don't charge a user.
We don't charge the users,
right.
Except for execution. And for some premium offerings for very advanced users. But what we're trying to do is to really engage new investors to investing, and we're trying to cultivate investors to, taking novices and make them more sophisticated and experienced and self-directed ultimately.
Do you have advertising on your site? Will you?
We will have some sponsorship, but we really think that the key factor when you're trying to appeal to a younger audience, and when I say younger audience, I mean people in their 20s, in their 30s, in their early 40s, and when you try to engage this new audience, it's all, I think, about the user experience. Brokerage and financial data is becoming a commodity, so if you want to attract visitors and customers to your destination, you have to deliver a high level of user experience. And we think that advertising sometimes pollute, in a way, the user experience, and especially now, it's not a huge revenue generator.
Right.
But there's one point that we haven't talked about that does separate financial services from other businesses, is that it is heavily regulated, as it should be when you have folks targeting these poor, unsophisticated youngsters, and you're going to be enticing them to invest in things by having a big video interface that has, a big Microsoft sign on the things, and skateboard past it on the thing and say, yeah, buy my shares or whatever. There are going to be real constraints about, you have to get registered as a broker-dealer, presumably, in order to execute trades, or not?
Yeah, it depends how you what's the strategy for execution. You can be an aggregator of existing brokers to route orders to existing brokers. If you do that, you don't need to be a registered BD, a broker dealer. But if you build your own trading platform, then
So which are you talking about doing?
We're going to start aggregating different third-party existing brokerages.
So let's go back to that business model, which one of the people my firm represents has represented is E-Trade, which has many clients and is very close to bankrupt every few years. It took a bunch of money, a ton of money in from Citadel and others, and that's because it turns out that if you're just executing trades, the margin is incredibly thin. And if you are now going to be in the business of merely spending a lot of money developing a really cool front-end interface, and then your revenue model is going to be to entice these people who are basically bankrupt and have no margin to share some little piece of their little piece with you, intuitively that doesn't feel like a big business.
So first, online brokerage as a business is not totally bankrupt. Second, what we're trying to do here is to deliver news, data, user experience, analytics to engage investors and then create a marketplace, not only for commission-based revenues like trading transactions, but also 401ks and other type of financial services. So we're trying to be a getaway to a more engaged and as I said, younger investor audience.
But, so I absolutely agree. I think that the point in terms of where you're going, and I think this is the point that you were making, which is that there are certain businesses which are just basically commodity businesses. And, in my lifetime, okay, I'm too old for that to be an interesting data point, but even in your lifetimes, you used to be people who did trading were able to get, a lot of money for, $25 for a trade. I mean, lots of money. Now it's nothing. It's $5 a trade. It's very little. It barely covers costs. The margin on that is small just because that piece of it is so small. So the key to your point in terms of how fast you saw people moving out of your accounts into other accounts, you need to do something to keep them. And what you're talking about is creating, an engaging interface for your audience to keep those customers. But if there's no money there, that is, if you're going to have to only share in the profits of the guys who don't have that is, if you're just going to be an aggregator that delivers it to them and you're going to have to live off of a revenue share with them, at the end of the day, aren't you topped out by how much profit there is in that commodity business?
As I said, first, it's not all about the user interface. It's the user experience is broader than that. It's not only the way people manipulate financial information online, so that's the user interface, but it's also all the tools and the services that you can offer in the experience. So that's one.
I had a question though. So
yes.
Is your platform supposed to be serving a more educational tool, or is it going to be education and guidance?
It's both.
And the reason I ask that is because your site sounds like it would be a more sophisticated version of what, say, Mint is. I'm sure you're familiar with Mint.com.
Yeah, we're a bit different from Mint in the way that Mint is more focused on personal finance. We're absolutely on the investing. We don't do anything else. So it's all about buying and researching companies, building portfolios, buying and selling stocks, mutual funds and ETFs.
You don't foresee you're starting it out that way and building a more kind of holistic kind of platform where internet consumers can do that and also have the same thing as say Mint, because don't you think that all ties in together?
No.
It's personal finance,
right? Our opinion is that it's better to do one thing than several things, and if we can do it better than anyone else, people will come for this specific purpose on our site.
I was going to say, somebody might be banking at my bank, right, with a checking and savings product and credit card and all this stuff in the online interface, and then they might have an account at Mint to see how their their account is doing, where they're spending and doing all that, and then you expect them to maybe have a third login, which is with you, to do the actual investing.
Yeah, but that's what's going on. If today you want to invest, you don't necessarily go to the same destination.
But today's trend, people are actually moving towards a single sign-on platform. I want to be able to.
Now, we have to stop. We're not here to beat up against.
No, that's one of the reasons I want to.
No, I'm just asking. So
Let's just pile on.
No, I was going to try to help out.
Yeah, yes,
answer that.
please, Mr.
So tag team, I guess we're in the same tag team apparently. Quick question of the people in the room. How many of you have only one, so I want to get only one account with a financial service provider? 2? 3? 4? Okay, 5? Okay. 1 point.
Now, let me make a point.
Wait. Hang on. Let Eric make a point now.
So one thing that I think is really interesting is why is that the case? Okay, nobody wants 5 different accounts if they can get away with one.
Right.
So that's a really important question for us to talk
That's
about.
why I'm asking that.
Yeah. So
Eric, you have an opinion about this, I bet.
well, so I think, I'm going to try and be the voice of consumer a little bit today. And I don't think consumers want 5, but they somehow have 5. And one of the appeals, I think, of Mint and companies like that is they're trying to, you can't pay attention well to 5 accounts. If I can pay attention to 1, that's a real advantage. And the point I want to make more globally is in financial services, perhaps an important trend is to look at new value-added services that can be constructed that couldn't be before. You're absolutely right, Jonathan. Costs have made lots of things very hard to do. What hasn't happened is they've made lots of things easier to do, and those new services are, by and large, haven't been invented yet. So my response in some sense is basically, the problem is that what we've seen is basically the old models, by and large, get razor-thin margins. And I'll mention 2 places I think there are opportunities. One is the fact that people have multiple accounts. They don't want them. Somehow that has to change, whether it's through an intermediary, just simply does information, provides services. Maybe for trading, they'll direct them to you. That's one. The other is retirement. I mean, retirement's the biggest investment most of us make. And yet, the average fact is that most retail consumers don't do that very well. And so let me ask the following question. The most important decision most people make is how to allocate stocks versus bonds over the course of their lifetime. Now, how does that decision now get made by most financial service companies? They give you this dinky little questionnaire, this 10, 11-item questionnaire, which as far as I can tell, I'd love to be told I'm wrong, has never been validated. Has never been validated. Okay, and then you're told, oh, you're a risk taker, so we're going to get you in stock, or you're a risk averse, so we're going to put you in cash and bonds. Now, there's a place where I think we could do better and invent products that actually would have some added value. And maybe I'm crazy, but consumers might be willing to pay. So I just want to point, sort of throw that out. Are there other examples that you guys can think of new services that have been invented
Well, I
in
want to
retail?
ask about this community thing. You said you're not community. So one of the aspects of your website, as I understand it, is that you can tell people or you can share your portfolio information with your group of friends or people who are your advisors or something like that. Is that correct? So I'm very curious about the idea of community and money, because I do think money is one of the most private things that people have. So telling people about what your stock picks are, maybe not so much, but actual quantity. So I was wondering if you had an idea of how that part of business was going to work out and your experience with that. I think Mint has a community aspect to it as well, right? Is that correct? So any of you guys want to comment on that?
No, I think that community is important, but it's not necessarily the core of the experience, because it's money and people are usually reluctant to share too much information. But when you look at the process of investing, because we are investing and just investing, you usually rely on your social ecosystem to source ideas or to confront ideas with other people. So what we're trying to do here is to facilitate this process.
Right.
But it's a customizable process in the way that some people don't want to share, so if they don't want to share, they don't share. If some people want to share, then we allow them to, we provide them with the tools to do so. Then there is a second layer, which is how can we collaborate or potentially compete? And here we're entering a space where, and it's actually very new, so we don't really know how people are going to react. Mm-hmm. We see all those websites coming up, like those social investing sites or whatever they are called. And they are not necessarily successful. They can add interesting value, but we're not sure that this is the way to go. So we think it's important. It could be part of the experience to connect with other people. Connect means doing anything with, share information or compete or collaborate. but we don't think it is the core of the experience in the investing space.
Okay.
This is actually our vision.
So you're busy working on that, I suppose. How
So,
you're going to...
but when you look at a platform like ours, which basically is a very, if I want to summarize, is a consumer version of a platform like the Bloomberg for a very different type of audience, but it's the same kind of beast. When you look at the Bloomberg, one of the most used features on the Bloomberg is the messaging system. Right. And the community is very important in the way that if you're out of the Bloomberg, you're kind of out of the community, and it's very difficult to communicate with market operators. So community, we think, is an important piece, but it's not necessarily the core of the experience. The core of the experience is probably the data and the information itself, and the analytics that we can provide to allow users to understand the information.
One of the things about this, from a media perspective, media people in general think about the spectrum of information as being kind of must-have, high value added, which should be high margin, and sort of commodity information. And that's sort of how media people think. The interesting overlay with financial services is that the person who is controlling the power here is the person who has the customer, okay? And we mentioned 401ks, which is a huge part of the assets that are available to invest and do things with. Those are controlled typically by a small number of people, whether it's the Fidelities or the large institutions, the big private wealth management networks. And being able to market, typically, if I developed a brilliant application and I invested millions and millions of dollars to develop just a beautiful, beautiful interface, which for a nanosecond is the best one before somebody else developed something else, my customer is basically going to be an institutional sale. I'm going to try to sell that to Fidelity to have them basically white label it, and however good it is, there's 30 other guys who's competing with them. And for Fidelity, they've got a contract with a bunch of employers, and they've got a nut, and they're trying to keep their costs down. And their margin is just what their margin is. So the amount of money there. So you can be Bill Sharp, who was my teacher at Stanford Business School, who was a Nobel Prize-winning economist who developed something called financial engines, which is, you say, gosh, I want the Bill Sharp algorithm to allocate my 401k. Well, there's 30 other ones that maybe they're not quite as good, but they're pretty similar. The outcomes aren't that different, and they're all competing, and they're all bidding for Fidelity for the cheapest, to get the Fidelity account, because it's the only way you're going to get the access. And the vast majority of those businesses are either losing money or are only marginally profitable.
So I want to just a little bit to brands, because this sort of brings into that. And Eric said to me on the phone that brands are so 20th century. That's what he told me when I asked about brands. So now that you've said that.
I just have to wake people up, so I say things like that.
Yeah, so could you talk a little bit about how that would work? And
So two things.
Yeah.
One of the interesting things about the point that Jonathan was just making is Phil Sharp is one of the brightest people I've met. He's a friend and co-author. And one of the things he didn't realize, he solved a great financial engineering problem. He didn't solve the consumer problem. The consumer problem is, where do I put my money, or actually, what are my outcomes like when I'm turning 65? Not whether I'm in stock or bonds. Consumers don't want to know from that. So actually, we've done some work with Bill that's been published. We actually asked people, what kinds of outcomes, meaning percentage of your pre-retirement income, do you want, as a front end to something like financial engines? And the beauty of that is basically it's a little, not quite as cute as your video games, I'm sure, but it's a little video interface where you drag people, given the financial engines kind of background, and it says, here is the possible feasible outcomes for you. Do you want to take a lot of risk, upside risk and downside risk, or do you want to make sure you're about 80% of your pre-retirement income? And then it goes off to financial engines and tells you what you should invest in. But I think part of the problem that many of these things are wonderful solutions for financial engineering. Now, the point in some sense is, just take a look if you had listed the top 10 financial brands 10 years ago.
right.
And what would they be like today? In fact, it'd be hard to name 10 that would have positive. So more globally, I think the internet has done a lot to kill brands. the competitors that you have seen now aren't competitors you thought about 10 years ago when you started this
No,
job.
I mean,
Well, and the brands have done a lot to kill themselves.
yeah,
most recently,
exactly.
but-
I think brands have kind of destroyed themselves. I agree with your statement. But I think that branding is actually, even though we were not giving it any importance 5 years ago, in especially internet marketing of our financial products, it's become very important the last 2 years, especially for Citi, where people have the assumption that we're going under, we're going under. It was pertinent to all our, marketing of any of our products that we make sure that our brand is strong and it's, being communicated. We're doing it in collaboration with just even branding campaigns and then adding product marketing to it. And it's become essential to the bread and butter of our company. Like, brand is very important for us today.
There's no question that brand repair is important. But as a major marketing strategy, the question is, to use your phrase of user experience, is what consumers are looking for is the financial service brand name, or they're looking for solutions to problems that they have.
Right.
Well,
But because he's going to have all these brands on his website that are just subsumed into his website that you can click on and you can go there. So, I mean, what's the point of that? It just...
And I'm glad you brought up Mint.com.
Right.
What brand is that? Yet that is actually a very interesting
But, their
potential.
drive on other brands, right? Like,
Yeah.
I actually, I'm in the process of working an RFP with them.
I thought you might be.
Going to know a lot about them. And, even like, say you have a savings account and they know that, they're going to tell you, like, well, you could make more money if you get a CD right now with, say, Citibank. Of course, I'm going to tap my own horn. So, Citibank and B of A, and they'll list all the people and they'll have the rates. Now, the brand is very important there. I mean, I wouldn't go into Joe Schmo CD. I mean, I think I'd prefer a Citibank CD or a B of A CD and HSBC. So they still are able to provide financial education and direction and recommendations, but they utilize brands.
Agreed, but let me just try this one other way. Of the competitors that you are now seeing online, how many of them were branded competitors 10 years ago? Your branded competitors were Chase, were geographically local. Now you're facing an international set of people. And so anyone with a reasonable brand name has entry into that market. Agreed, Eric Johnson CD won't sell.
Right. I mean,
Except to your mother.
Well, maybe.
No, I mean,
Depends on the rate.
when we were depending on, say, our high-yield savings accounts, that was like the hardest market for us because we were really competing with the small mom-and-pop banks that were offering an internet CD product. But we realized that we cannot compare our brand to, I don't know, the Kirti, savings product, right? Because what relevance do I have? I mean, what do we know about this other, company? And can they really back the funds that I put in there? So we really did not, initially we started competing. Then we pulled back and we're like, no, we have a certain brand equity. We're a big bank. We do not need to compete with these smaller banks. We also don't only sell a savings product. We sell a variety of products, and so we have to be really careful about our pricing. And that's why we pulled back, and we really only focused on the big competitors, which are the big banks that are out there.
I think we agree that price is not everything.
Price is not everything.
But the question I have is, what else? Is there a third lever? And that's sort of what I'm talking about in terms of consumer solutions. So Jonathan pointed out that the people who actually own the customer own a lot of the value. So Fidelity, a Vanguard, they have actually an awful lot of information so they actually own the channel in lots of ways in 401k plans. Now they also own a lot of data about the customers. So the question is it Fidelity's brand name or is it the problems they solve for me? Are they the fact that one of the few options I have when I go to my Columbia 401k? Actually, they're not. I don't think a 401k provider for Columbia. So, the amount of my 401k money they get, by definition, is zero. So in some sense, the question is there a third lever, which is using the data you have about customers to actually improve their decisions. That's sort of forward-looking where I'm arguing. Brands are necessary, but no longer sufficient.
Right.
But on that point, the data, I'd be curious because on a product like a CD, which is just a savings product, if people do think that brands make a difference, they're wrong to the extent that the government is insuring all of them equally. The government doesn't insure. Actually, the government would insure if he was allowed to sell the product. it would be as safe in the Eric Johnson CD as it would be in the Citi CD. And if I would get a higher interest rate with the Eric Johnson CD, it's actually just irrational to essentially pay more for a brand that can't, basically by law, can't provide anything else.
But I'm in marketing. So I'm here to market my product, and I'm going to play up whatever attributes I have to secure that new customer, right? So yes, it's true. Any of them are safe, but who do you really want to be with? And that's my job.
You've never seen this guy market. Oh, it's crazy. You've got a serious new competitor, my friend.
But I think in terms of branding, I think it's all about brands. You absolutely agree. The the logic says that some products are better at some companies, etc. But I think it's all about the emotional relationship between the customer and the company through the brand interface. And I really think that brands, especially in the financial services space, are going to become more and more important. And the current crisis is a very, very interesting moment because it's destroying several very well-established brands, and some new players are going to rise with new brands and new values, resonating with new customers. So I think it's going to be a very, very interesting time. But I really think it's all about the brands and what type of experience brands can deliver in addition to the products and services. So I really think that the emotional part in the relationship, and I'm not a marketer, but I do understand what you're saying, is the number one priority in the relationship with customers.
But you put some, when you say user experience, it's a very nice word. I'm curious what that means in terms of what a consumer would experience. How do we differentiate a product because it has a good user experience than not so good?
So when I say user experience, I mean more online user experience. So
I mean, I want something beyond eye candy. Obviously, I mean, obviously, it's nice to have good colors.
Well, the user experience includes not only, as you said, the user interface, but the user interface is only the part that you can see. It's all about the values that you want to communicate, the attributes of your brands, the type of products and services that you deliver, and how you deliver them. It's all about the attitude that you have. And for us, it's obviously very important since we're going after a new generation, and this new generation is very sensitive to those kind of elements. So the user experience is really a very broad thing that includes all part of your business, and not only the user interface that is the most obvious component of the user experience, because this is the one that you see, that you can touch, that you can manipulate, but it's much more than that. And I think that the brand, and this is why it's important, the brand can be the element that puts all those components of the user experience in line towards a single purpose or a single audience. And that's also why I absolutely think that one of the next trends, but also I'm not a financial services guy, I'm coming from outside, but I really think that what's going to happen is that brands are not going to converge. So those big supermarkets of finance, I don't know what they're going to become. I really think that the divergence is going to be the new trend. That brands will be very focused and will resonate with a certain type of audience, will deliver a certain type of product, and they will deliver less but better than anywhere else. So I really think that this is the time of the divergence.
Part of what's going on online is that you have all this information about people's purchases, transactions, what they looked at, what they clicked on, and trying to then anticipate that and offer them things either to look at or to buy.
Behavioral targeting
correct.
is becoming essential. It's a part of our day-to-day marketing model.
Right.
We base our product structures, even new product offerings, based on, okay, X percentage of our banking consumers online are, also doing X, Y, and Z. therefore maybe we should try to promote to the other people that are not necessarily engaged in this, maybe an incentive to start engaging in X, Y, and Z,
Right.
and start targeting them.
But
in
does it
different
make sense that you're going to
experiences.
bring in all these products and the branded products into?
No, what we do is we basically manipulate the existing products and create different product offerings out of them. And based on even what you were saying from a user experience standpoint, what's become very important for us, and just for me personally in the online spaces, certain things are offered in our brick and mortar operations, and we try to do everything really on an integrated platform at the bank now, where if it's offered phone, branch, wherever, it'll also be offered online. But I've been pushing back most recently on offering things online because it's not a good user experience, because people will not be able to say apply for that product online, or they won't be able to fulfill their reward through the online space. And so user experience for us is even bigger because it's also what we can do at the back end, which I think can only be done efficiently in a nice large organization like, say, Citibank or B of A and stuff.
Right.
And do you have advertising on your online site for third-party advertisers or not?
No, the real estate on Citibank is only for Citi and all its affiliates.
Right, so that's a problem in terms of holding on to your customers for people coming in from the outside. That you want your customers, it's only for your stuff. You're not going to.
Well, yeah, we cross-sell other, products from other
But
entities.
Citi,
At Citi.
Right, at Citi, right.
At Citi. No, I don't market other companies' products.
Just one thing here. I think that the internet, as you said, made financial services much more of a commodity than it used to be. And that's why I think the user experience is the key element, because if you want to differentiate yourself and get more customers and own the relationship, you have to deliver a high level of user experience. And I think that the main goal of this user experience should be not to invent new products or invent new services. It should be to make the manipulation of those products and services much more simple, much more intuitive, much more user-friendly, and much more compelling. Because when you look at the mass market, the mainstream, financial services are usually perceived as very, very boring and very, very confusing. So how do you solve this? And our vision was, if you want to, we are not going to reinvent the wheel. We're going to deliver information, we're going to deliver analytics, but we're going to deliver them in a way that is absolutely different, much more graphical, to reinvent the way people manipulate information. So we are not reinventing information or analytics. And if you look at products like the iPhone didn't really invent anything. It's just a smartphone. But the way you manipulate the device is absolutely different. The Nintendo is a very good example also. It just changed the rules in the gaming business in a very, very short period of time. And it's not by reinventing what a game console is or what a game is, it's just reinventing the way people manipulate a game software. So I think this is the main challenge in the financial services industry, and this is exactly why we're doing this project. We're trying to make finance and investing less boring, less confusing to a broader market. And we think that by leveraging only on a conceptual level some video game design techniques, we're obviously not developing a game here, that we can achieve this goal.
Let me ask about a specific consumer problem in your market segment, which is, it's well known that young people aren't saving enough toward retirement. This is the time they should be putting as much as they can, and they don't. So there's a real market opportunity. You'd love this because that would give you more business. So in terms of user experience, do you have any ideas of how you're going to solve that problem of getting people to save?
The problem is
it's a serious problem, obviously.
That retirement and investing is a chore. So young people, and when you talk to young people about retirement, they think about death, and it's not their problem. They're not here for that. So we think that the way to make them investing is just to engage them. And the way to engage them is, again, the user experience, we think, combined with the technology to deliver information, analytics, and all those components of the experience. So if we can create, if we can transform investing from a chore into more like a hobby, okay, where you can grow in terms of knowledge, in terms of confidence, and obviously financially too, then people will get to a point where they will save and invest for retirement. But if you tell them, if you give them lessons, if you tell them you have to retire because if you don't, you have to save for retirement because if you don't do that, your life is going to be a complete failure. I don't think this is the way to do it. And usually financial terms, but when you look at marketing in the financial services space, it's really like that.
Let me just mention one of the...
It's changing, but it's really like that. I mean,
not Citibank, obviously.
No.
We do try to be aspirational. I think it's really important.
Exactly.
It's to create the aspirational, kind of cloud that you can go there and you can achieve it. And actually, you're speaking a lot about the user interface as well, and you're going to use that to engage people. I'm actually also involved, and I'm on the prototype committee at Citibank Online, and so we're actually going to be building a new interface in the coming year or two, knowing our technological deficiencies sometimes with cuts, so it may take a little longer, but the idea is to make it visual. I think making, how you spend and what you do and how much you need to save should become more visual. It shouldn't just be numbers in an account summary, or when you get your 401k, like monthly bill, monthly, whatever you call that. Statement. So I don't do paper things, sorry, very paperless. So we feel that the way we're tackling the issue is to really create something that's more visual, something where they can manipulate it. They can there'll be like a pie chart and you want to allocate, X percentage towards, retirement savings and then create almost a ticker towards that goal. So we feel that that's going to be a great way to engage, the younger online customer.
Let me suggest a really boring, much less interesting, what you guys recognize is a lot of fun, but, a big change in 401k investment happened when the default was able to be changed from 0 to non-zero to 6%. And we've done a lot. So that's, takes 2 lines of HTML and it's incredibly effective. Of course it takes a lot of regulation. Jonathan will be first to tell us this, but once that regulation's in place, it allows you to change the default. That increased savings rates much more than any other single piece of marketing that you could think of. And we've done work with a large German auto company where we've just been putting essentially different engines as the default option. And it's amazing, something as important as engine, you think that's, for a German, that's the most important decision they can make about a car.
Right.
It drives about a 10% shift in picks of different engines, even though we're talking about thousands of dollars. So this sort of very passive, very boring, what we call choice architecture, can be really very powerful in changing behaviors.
Right.
And so
Which it used to be having a banker tell you that, and now it's actually something automated and it's online. Okay, so now we're going to open it up for questions. So I know, so John, go ahead. And then say who you are, please.
Johnson Garrett, and I graduated from here a little over a decade ago, so I'm one of the older folks. I have a question. I've been in the internet world for a long time. The way you're describing the financial services is in very much of a smart utility kind of fashion in terms of the evolution here. I was curious, beyond being a utility, for example, I'll pick StockTwits, which is a Twitter variation of something very different, but it seeks to speak to the investing side of financial services. The notion of crowdsourcing. How do you harness the wisdom of the crowds using online? Can you do more with online than just being a smart utility?
This is the Twitter phenomenon, I think, has a huge potential to transform not just the consumer side, but actually the professional side as well. Because again, the information that people rely on, whether it's on Yahoo Finance or otherwise, is, it's delayed 10 minutes or what have you. And in terms of the kinds of things that people that have an impact on actually making investment decisions, it's real time. That's what traders care about. And frequently people, you see advertisements of Reuters versus Bloomberg versus Dow Jones as to the minute there's big ads the minute that this story broke because it has an impact. Well, if you're on Twitter, you might find out about an earthquake in China a couple minutes before the first of those, right? And you can make investment. You could make that can have some implications for investing. And so the impact of real-time, people-based, community-based information on investment decisions is potentially, I think, seismic, not to use the earthquake analogy too much, on the structure of a number of these industries. And I think people have not really begun to think through how to integrate those with these products, because these products are not built for really real-time information.
Well, actually, it's a great question. Recently, when I came back from maternity leave, the first thing my boss said to me was, Kirti, can we do something on Facebook? And I was like, well, sure, I could find out how we can build a widget and do something. But what I'm discovering through the kind of building the strategy process is that we have to be very careful about how we utilize the community-based space in the online space, because it shouldn't really be about acquisition. That's not what we want to approach it, use it for, rather.
You mean acquisition of customers?
Yes, acquisition of customers. We think that this space should be used for a very specific reason, which is education and information, and to really learn from consumers what are their real opinions, what do they really think, what are they angry about, what are they happy about, and be able to communicate with them in real time. So, that's kind of been our biggest learning over the last couple of months since I came back, which was, well, we really shouldn't be going into that space to just do a regular BAU acquisitions campaign or cross-sell campaign. For instance, the other day, we work with a lot of external agencies, and they were watching the Twitter board for us, and they said, well, someone Twittered saying that I signed up for a paperless statement and got a paper statement from Citibank saying that you've signed up for paperless. And so the thing is, though, if we had a communication strategy in place, we would have said to them, this is the only one last statement you have gotten. We did it just to make sure that you, the actual account owner, did this. And there wasn't someone else going into your account online and trying to, do things with your account. It was a security-based reason for why we sent that letter. And it would be the last paper statement sent to you. But we just kind of sat back and listened. And these are important things for us to kind of absorb and figure out how should we either communicate it through our portal, through citibank.com. Should it be done in their logged-in experience when they come into the site, or should we have someone on the Twitter board reacting? So it's a really great question. It's a work in progress. Our top 10 competitors are twittering a bit out there. They don't really have a structure around how they're twittering, though. They're just kind of twittering. And it's kind of amusing because I think you should have a real kind of, okay, this is how we're going to do it, and this is how we're going to use it. Right now, Cards is on Facebook, and they're promoting $50 donation to charity for opening up or sharing a Citi card, account with one of your friends. And we don't know if we really want to do that, though, because it's still an acquisition-based program. So we really want to sit back as a bank and right now just take it slow in our approach to the whole community.
Okay, go ahead. Yeah?
Yeah, my name is Adam Clayman. I was really interested between the dialogue between the two sides of this conversation. And I'm curious about a couple things about trust and brand and how the financial downturn is impacting this, because what Gaspard was saying was quite interesting about sort of focused marketing and a younger audience who may look at, I'm sort of older than his demographic, but may look at Citibank or BFA as the problem, not the solution. Got us into this, we're now trillions of dollars in the hole. The generation he's talking about is going to be paying for that for generations to come. So in terms of, that experience is like, how do you fight that sort of battle? And then to the part about savings, it's sort of making it a chore. It's like, well, my parents just lost half the value. Why would I ever do this? So, it's more of an observation than a question, but I'm curious about how trust and the downturn is impacting this whole space.
I mean, my feeling is that the current crisis is absolutely deep and will change probably the landscape of financial brands out there. There is obviously a trust issue. I mean, everybody knows that, everybody feel it, everybody hear it, everybody see it. So I think that what's going to happen is that new brands that resonate with certain of audience, those post-crisis brands with new values will appear. And this is a great opportunity to invest in this industry because it's basically absolutely ruined. So the industry collapsed, and obviously the financial services industry is absolutely essential. So, and people will still need to invest, and they will still need to save, and they will still need to retire someday. But the question is, how do you build this trust that is absolutely necessary when you are in the business of managing people's money or having those people invest some money with you. And I think, again, that it's all about transparency. So it's all about, and that I think the internet is a great opportunity here to allow users to access information, data and news in real time from anywhere at any time. And just to answer your questions, I think that the great opportunity now in terms of our community and in terms of the internet for financial services is not necessarily for customer relationship. I think it's more for, we can generate new type of data based on the analysis of Twitter or Facebook to deliver new type of data to investors so they have new elements to put in the mix of their decisions. I think that this is the really great opportunity now with the internet in the financial media space, is that internet provides an amazing source of structured data that allows companies like us to build tools to analyze and create new type of analytics that I think are much more powerful than ever before. And this is why I think there is a huge opportunity in this space now.
And look, I think the challenge for Citi goes back a little bit to your answer of, which is understandable, which is, I'm not going to give my real estate, forget about advertising, I'm selling my products on my real estate. The fundamental question for a customer is, and the fundamental challenge of the financial supermarket model, which says, on the one hand, I do want to only go to one place. On the other hand, I want the best in class products across my product portfolio. And if I go to a financial supermarket, I'm going to be given only their products because they won't let their real estate go anywhere else, even if they're really the best in this and not the best in that and the other thing. And the opportunity for somebody to create a meta brand which says, I am your one home, and you can, I don't have a dog in the fight on which product you use on each of these 50 different products, which is why people have, in many cases, 5 different accounts. I can make it simple for you, and you can trust me.
So let me build on that for just a second.
All right, and then we're going to ask some more questions from the audience, which is the point of this part.
Okay. One at the other side.
Go ahead. 2 professors on a panel. It's like crazy.
I'll pass. But I think this point about third-party intermediaries is really important. I mean, I think your point about trust. Trust isn't something you advertise. Trust is something you earn by behavior. Mm-hmm. And frankly, the behavior of existing brands has not been that good. So there's a fallacy out there that people make good financial decisions left on their own. And if they have intermediaries, those intermediaries are operating in their best interest. That's clearly not been true. And so I think that's
That's
important
fine,
point to
yes,
make.
I understand.
And there are solutions.
All right, Liz.
So I'm Liz Gordon, and I'm currently responsible for the cases program at the business school, but I had the experience of working in financial services in the 80s, and to me, it's really obvious. I think you just said it, Jonathan, that people want the best product across. That's why they have multiple accounts, and we tried, the company I work for is an insurance company with an investment arm, and we tried to buy a consumer bank, and it's a collapse. And we spent a lot of time researching consumer relationships, why, how you fill out financial services, why you keep your account, why you don't keep your account. And nothing that you've said today has convinced me that anything changed back then. It's trust, it's the user experience will create that trust. And even with Citibank, with a collapse, it's going to be about how you handle it and what my experience is with my account. The tower can be burning down, but if I can go to the ATM and get my money, and I continue to get my statement, I'll have a moment of fear, and I'll get a communication saying everything's fine, and as long as it continues, I personally think that it's not going to matter. The topic that I haven't heard anyone talk about that I'm interested in is internet security. I know some people won't even, they're very adept with the internet, but they won't bank or purchase online. Too many of us have read about, rafts of social security numbers being stolen. In my household, we already have free credit monitoring from one of those. And, what you do at Citi, what you do in your new product, what are you doing about that so that I can feel that I can do all this stuff online? And if I put all my financial information in your aggregator thing, now I'm vulnerable, not just with my banking relationship, my investment insurance relationship, but everywhere.
Well, I mean, at Citi, for Citibank Online, I have to be really candid. I'm not on that side of the infrastructure. I'm really in the, the marketing interface for the site. But we have 3 or 4 different security platforms protecting us. In addition, really all of our data is managed in-house. We don't share them with third-party vendors. So the idea of anyone's information being stolen is really slim to none. But of course, I can't tell you there's 100%. It's like 100% secure because anything. Watch tomorrow, someone will have like 30 accounts, all of a sudden stolen. But as far as like you said, the online consumers, that there are certain people who go online and some don't. We've just basically have come to an agreement that there are certain people that will not come online. You can't change their behavior. They're used to a certain way of operating. My father is one of them. I work at Citibank, and he's a Citibank customer for 35 years, and he will not bank online. I created a login for him. He still refuses to do it. He's like, no, I like my brick and mortar. I mean, you just can't change certain mindsets. And so we're really not going after those customers. We're there to communicate to them that it's safe and secure if they ever visit our site. But generally, our population, I think, will tend to be the same population you're going after, which is the 21 to 44-year-old market, that these people have grown up on the internet. They understand it. They know there's some, ins and outs of some things being secure and not secure, but really these are super computer savvy people.
Eric, is there a difference between financial services, security issues, and everybody else? Is there a level from any of the work that you've done, the way that people feel about it?
Well, first off, people tend to, there's a huge age gap. So to sort of, build on that point, I mean, when I teach MBAs and I say, are you concerned about internet privacy? Most of them go, no. I mean, so, I am. And but so I think there's a natural experience that people have, and financial services, I think that's more so. I mean, it's amazing that there hasn't been more of, because people are concerned in theory about security and privacy. They confuse the two.
Yes.
Yet there has not been nearly the There's an issue of whether people can worry about too many things, and that's not in the space of things they worry about right now.
Right.
What it takes would be one huge disaster.
Right.
But right now, I think there's an age. An age experience.
But the way that you ask the question is like as if it's a problem. And the reality is, if they're insane enough to try to change her father, I mean, her father is a higher margin customer. Her father is there for 35 years and ain't going anywhere. If you get her father online, her father's going to get emails from him saying, come over here. Okay? Yeah, if she starts investing to destroy her own competitive advantage, she's crazy, and she's not going to do that. She did that because she loves her father, not because she thinks that's a good
Okay,
strategy.
back there. Yeah, go ahead.
Oh, hi, Maria Morales. I'm an executive MBA student, and I have a question really for Professor Lee and the rest of the group. But on the institutional side, what do you see some of the opportunities for the financial services organization kind of investing in that, and how does that coincide or sort of get married with these institutions that have done business in very traditional ways, and their sort of, their infrastructure is antiquated, this old legacy system. So how can they, how do they navigate that, and how do they make the transition to something that looks more like the consumer space?
Well, I mean, I think you've heard a bunch of pretty creative things that folks at Citi are trying to do, and I think all of them are trying to do that. But I think what you are going to see is the number of really large financial institutions is going to be smaller in a few years. That is, there's going to be a lot of consolidation, and what you're going to have essentially an oligopoly of a handful of survivors who are probably going to be, I'm guessing, J.P. Morgan, Citi, and B of A, and I think all the rest will be subsumed in that. And then there's going to be a bunch of small guys, and there'll be certain, and there's going to be certain products and services and certain kinds of consumers who are willing to essentially pay a premium to be part of those, and there are others who won't. And then there are going to be a bunch of very interesting creative aggregators who will, I think, create some brands around that. And I think you're going to have a kind of a tiered market. But I think at the top, right now, you've got 30 indistinguishable large financial institutions, or whatever the number is. But I think my guess is that's going to be 3. And I think each of those will target essentially a different kind of consumer.
I mean, to add to what you're saying as well, the reality is that we know that we're not the only place that you're going to get all your the products in your portfolio from. And I think all of us are wising up, and we're trying to create, at least in the online space, an interface where you can bring together your Amex, your savings account from Chase, your 401k from Fidelity, being able to come into one interface and view it, and without giving too much away, because I'm working on something that's kind of top secret, we're moving towards that at Citibank. Yeah. And we're kind of wising up, and we see that you're not going to only own Citi cards,
I think I didn't make my question clear. It was more in the along the lines of like prime brokerage offering, like those bigger, not the consumer space. Like how do these institutions, put their hands around that and create competitive products? I mean, are they doing that? How can they?
You see, there's the full-page ads. It's going to be ugly. It's like a man my age changing their clothes in public. It's just not. It shouldn't be done, right? And when you see the big full-page announcement of Morgan Stanley and Smith Barney coming together with their very catchy internet address, which is morganstanleysmithbarney.com. I was at Morgan Stanley when it was Morgan Stanley Dean Witter Discover.com. I mean, it's not going to be pretty. Okay, I do think, with all respect, I do think though that this fundamental issue will be dealt. If it's not dealt with by the institutions themselves, it'll be dealt with regulatorily, which is that to this day, these prime brokers feed customers direct that product that's in-house product because the brokers get a higher margin on it. And you take a once proud institution like U.S. Trust that was at one time a great independent institution. Then it got swallowed up by Schwab, and it got swallowed up by Merrill, and now it's by B of A. And those are kind of a traditional prime broker who's really trying to get the best product for their customers, and then with each new person, they're getting beaten over the head about, feed them this, feed them that. And, you know, it's bad for the business. And I think if they're going to survive, they're going to have to figure out, and it's culturally a huge deal. You can't just do it on a dime. So the fact that it sounds like even that Citi is going to realizing if they're going to be the place, they're going to have to figure out how to ways to partner, to work with others, to be able to credibly say, it's not about me, it's about you. I mean, if you're in a customer service business, it is a fundamental issue with being a supermarket and positioning yourself as a trusted advisor. It's just a real problem. And unless they figure out a way to do that, and honestly, if they don't, as long as there's somebody like Obama who's president, as opposed to somebody like Phil Gramm who's president, I think at some point they're going to make them do it.
Okay, well, that's it, because we're out of time, and I want to thank the panelists, and stay for the next one at 11 o'clock. Thank you very much.